Okay, hi there traders. Now, you should be hearing me loud and clear. Yep, all should be good. So just let me know if you can't hear me, and just before I get started, and then we'll get up and running. I'm just gonna make sure I've got two things running, so I'm just gonna make sure, just gonna put a note on the other system. There we go. All right, now I think we're right to go. So today, what I want to chat about, right? So we're going to take a look at is obviously it's on the screen there, that oil market rout. So it's the first time in history that we pushed below zero, essentially, and we'll go through that. Obviously, Crude was under pressure. G'day, Jason. Thanks, mate. Um, Fantastic, Alistair. Thanks, mate. So we'll just go over this. I mean, I know a lot of people have probably read it, but it probably, I mean, some it may not make sense, some it does. It's mainly if you've never really traded the futures market, it's got to do with the futures market and delivery and all those sorts of things that go along with it. So we'll go touch on that a bit. Now, a lot of people might be looking for an opportunity on the long side. Now, I just would not go near it. I mean, I've traded futures for a long time, for many years. That's where I sort of cut my teeth in options as well. I think when I went in the industry, it was 2003, two? No, it was actually 2001, sorry, when I first started. So I've been in and out at the start. But yeah, that's where I cut my teeth and learnt the bits and pieces. And it was mainly in the futures market and options on futures, with equity options, or we traded a lot of crude options as well. When the market was booming, we were just selling. Sounds risky, but selling naked calls was fantastic because of the volatility. Now that's fine because the market was going up, but at the moment it's a different story, and you've got to know the underlying, what's happening with the underlying market, what happens with futures, and what's the mechanics of them all. Otherwise, you just you could really be getting. And there would have been a lot of people carved up. I don't know if anyone knows Interactive Brokers. Now they lost, I think they've written off $80 million or so across an Interactive Brokers large platform because of the delivery and all the debacle that went on with that spike lower. We'll touch on that a bit. And just before I continue on, we're also going to take a look at the, being in Australia, we're going to look at the ASX 200 and just where those markets stand. Are we going down? I mean, generally you're associating the sell-off in crude oil with the sell-off in equity markets. Now, it hasn't quite played out that way. Whether we're all looking ahead now, we're basically looking over the abyss to what's going to happen on there when we start to come out, or is this just still part of the bounce? We're still bouncing up before we cave in. We don't know. So we'll just touch on that, have a look at why we've, for the alert group, we're looking at a short in the ASX. It hasn't quite set up yet, but it's starting to show some good signs. Whether we take it early and risk, if you take it early, obviously the payoff is better, but there's less probability. It's a lower probability trade. Or do we wait for a better setup, a more confirmed setup, and the payoff could be lower, obviously, but when you're potentially looking at a couple of 100 points, and higher, that payoff's pretty good to me in anyone's book, really. So look at the Dow, the S&P. And I want to just go over for shares, some stock trading ideas we're looking at now. I'm changing the way I come up with the alerts purely because there's no real momentum. When things are being poleaxed and hammered down to the lows and you're getting these massive sell-offs, nothing's really setting up. You have to look at a different approach to buy off the lows, as opposed to, once the market's based out, it's starting to lift, you're getting momentum on your side, you're looking to buy into the first pullback, and then you dive in with your setup and away you go. That's not really happening. You're looking more for bounce plays, and how do I tackle that? Or how we're looking at tackling it anyway. Yeah, so I'll give you a couple of examples there, and then we'll just open up the forum. You can put in a few stocks, you can put in some other things. We've got an Aussie trade that put in a buy alert, and we also, when we put in the buy, it also has a cancellation level. And if a trade doesn't go up in our favor, it goes down and it triggers the bottom level, the stop, where the stop would be. We cancel it out. Now, it did that, went down, and then took off in the US session on Friday, and it was actually looking good just on the open this morning. But unfortunately, as happens, if you're not around at the computer, you can miss out. But I just want to touch on that setup as well. So firstly, we'll go into oil, a bit of a rundown. So I don't, it's easy to say, not FOMC, I was thinking OPEC. They control output, basically. So generally, if they're trading at $60 a barrel and they want it up at 70, they can start cutting production and things like that. But it's not going to work now because there's obviously so much pent up stock or supply, and no real demand at the moment until countries get themselves back on their feet, whether they're going to soak it up at a lower price. But everyone, obviously, we still need oil. Oil's not just useful for industry and cars and fuel. It's also massive. Well, it's obviously the only input for plastics. Yeah, that's derived from oil. So all these sorts of things, a lot of different industries linked to oil. So obviously there's a demand for it. But until we see countries start to come out of lockdown and you're expecting demand to lift, um, I wouldn't expect crude to start taking off, because it's not. Obviously, if we're going to factor in what could be happening, we're going to factor in an increase in demand. Until things change from where they're at the moment, I don't think demand is going to be affected. Now, even if it does, we've got so much, like we said, storage. They're having problems with storing oil. Where do they store it? There's ships coming from Saudi to the US, and the US are going to have to find places to store it. Now, if you just because you start increasing demand, you've still got a lot of glut to get through. And that's why you're getting so much pressure on the futures contract. And there's obviously a few things. This route that just come completely banged down through negative territory, um, that's due to the mechanics of the futures contract. So if you're used to punting, and a lot of people were, they're just used to trading derivatives of futures contracts, whether it's the futures directly, and they've got no intention on holding it to expire. They're just playing around. They're buying because this has been sold down. They're seeing the sell. They're looking to buy on that. You know, off the low, as people do time and time again. They don't just do it in futures, you do it in stocks. Buy the lows, buy low, sell high, all that sort of thing. It's come down too hard, I'll buy it here. Okay, it's come down harder, I'll buy a bit more. All that sort of thing. So that mentality is drawing people into the market, whether it be CFDs, whether it be options, say buying some calls, which is not too bad. Or what a lot of people do, if they think there's a rally, they're looking to sell puts. So selling put is getting you the income. The problem is, if you get exercised, I don't know if anyone knows much about options, then you have to supply basically the oil or the futures contract. So when you come into expiry, there's all this argy-bargy. When they run from one contract, they roll into the next contract. And it's been happening for years and years. That's a function of the market when it's trading nicely. But when you're getting towards those zero line, and we've never really had a massive problem with demand and supply, this pent-up supply, we've never really had that. They can turn the taps off a little bit. They can drop the supply a bit, demand starts to come back in, and that's how they're balancing things. OPEC and things, they're balancing up and down with supply and demand. Now, when you've got supply just keeps going up and up and up, and there's no demand's just gone out the door, then futures contracts just keep selling off. And when you're having to roll, if you're looking at rolling from one contract, so crude oil futures go from contract to contract, as in every month they expire somewhere around the 20th, give or take a few days depending on the month. So when it's expiring, people will just roll from one contract, sell that, buy the next one, or if they're short, they're going to buy back and sell the next month. Problem is, if all these buyers are looking to sell, and there was just no bids getting on there, because obviously that problem is, why would you want to buy just before, if you got no intention on taking delivery, which is 1,000 barrels of oil, and obviously you've got nowhere to put it, so why would you bother buying it? There was no bids, and that's why you got that hammering into the market just in search of buyers, and people buying it at negative $40 a barrel or whatever, and looking for that bounce. So I don't expect that to change too much, even though it's calmed down and we're back at $16 a barrel at the moment. That sort of situation is going to happen again coming to expiry of next month. Now, if we're not coming out of lockdown and there's no build up of demand or anything like that, and starting to eat away at that supply, why would that not happen again? We could see this sort of thing happen, go negative when we get into the rollover of next month, okay, which is going to be mid-May, and it could happen again and again until things drastically change. So with oil, I'm not seeing anything changing in the near term. So I am more than happy just to stay away from that market. I do not want to go near it because I know what the futures can do. And I mean, you imagine if I bought a contract and I couldn't get out of it and I'm stuck on expiry and I have to take delivery. Can everyone hear me okay? Just dropped out, sorry. Okay. And if I have to take delivery of 1,000 barrels, and that's what they do. They can literally back a truck up to your house. So that's your address. Here you go, 1,000 barrels. Hey, done. And yet you have to do it. There's no real way. You pay a massive fine to get out of it. But the problem is they've got nowhere to put it anyway. And the big thing is too, you can say they just stop production. It's to turn off production and turn it back on. My brother's in the industry, just done his doctorate in with PhD in geology, so he's in the oil industry and he's not in there at the moment. Yeah, from Melbourne in Australia, so Aussie. Um, to turn it back on can take a long time. It's not a process of flicking a switch and it's back on. It's I don't know how they've got to ramp up production. So they're very, all these producers are reluctant to turn it off, which means more and more supply. So that's why if it happens today, we demand picks up and we come out of lockdown, Chinese demand picks up, all the other demand picks up, um, then they could eat away through that supply, and then you might find that okay, obviously we start predicting the future, oil prices start to lift, or they might just change, be range bound for a while until things continue on and they start building up, eating away at that supply further down the track. If they don't turn on now and turn on later, then you've got a month's worth of extra supply they've got to eat up. And because, like I said, producers not going to willing, you wouldn't expect them to be willing at all to turn off because it could take another year to turn back on. And that's a major source of income for many countries. So for me, yeah, I'm happy to stand aside from that. I think there's a lot more opportunities. You're better off trading stocks into oil for a particular potential bounce because you're not going to you wouldn't expect to get hurt too much. They can't go below zero. They go to zero and that's it. But I would be standing aside to that until I start to see oil lift. And that's the oil chart. I mean, it's just absolutely ugly. You can, even if you cut that off, the market's still, chop it off about $11. You say that's a blip in the system. It's still heading south, and we're still holding lower levels and still holding lower highs. So yeah, that's it's interesting. But like I said, I would steer clear of that. I would much rather the risk on different things, um, with the risk that's inherent in the rollover of the futures contract, and even going short, you probably find it's going to get harder and harder to go short because, it's obviously shorts are diving in, whether it's a CFD or futures or whatever product they're using to dive into the market, they're getting turned off. I think there's massive. I think CMC did something with their holding costs just to deter people. You probably find a lot of platform providers are going, no, we're not going to let you buy or sell any new contracts, short into it because it's just creating havoc. So it'll be interesting to see how it plays out. But yeah, I'm happy to watch from the sidelines. So next, just want to go over. So I hope that helps anyway. I hope that it's a bit of a heads up to what's happening, and it's worth doing some research into futures and how they work. And you can look at contract specs, when they roll over, different things like that. It's the same into, I don't know if anyone knows, they've traded wheat, corn, oats, all that sort of stuff. Anything that's deliverable. And traditionally, futures come from, they're used to hedge by farmers. So if you think your price is going to go down, you're going to get less. You'd buy the future, or you'd sell the futures just to make up any losses. And then when you go to selling the crop, you close out your futures, you book those gains. Or if it does go up, then okay, you're going to make more on your crop and you're going to cut it off. But essentially, if you're happy with the price now, you lock it in with your futures, and then you're happy to go and produce it and you're selling at that price because they match off whether it goes up or down. You're using the futures to hedge, to lock it in. Anyway, yeah, 1% to 10%. So they're doing funny things. They're saying, well, if you want to trade crude, then it's going to cost you a lot. Trying to deter people, I'd say. So it's worth looking into futures just for that aspect. Oh, that's what I was saying. So, for instance, if you've got things like uh, wheat, say wheat, for example, and then you get a hurricane just completely wipes things out, and you get all these short contracts. People are selling it, think it's going down, and all of a sudden, a hurricane comes through. It's unexpected. It takes out half the crop. Prices are going to skyrocket, but the problem is they go into lockdown mode. So, um, if it rallies more than a certain percent, they close off for the session. And I've seen that happen 4 or 5 days in a row. So if you can't get out of a short position it could be the space of seconds, which you're probably not going to be able to, and then it goes into lockdown again, it gaps up the next day, you can get absolutely crucified. So if you don't know these things when you're trading these sorts of commodities, um, you, you've got to be really, really careful because there's things, and you've got to be on the ball of what's happening, what's the mechanics of the contract, what could be my downfall, what could really hurt me, especially if you're trading options, and then you get limit down or limit up, they call it. If it goes limit up, it means it gaps up all the time and it closes off, and then the next day it gaps up, it's limit up again. So it closes up. Once it hits a limit, bang, it's limit up, it closes out. So all these sorts of things, and it's come to the fore with this crude oil. All right, let's go down. Forget about that. And let's go and look at. Let's have a look at quickly the indices. So this is the Dow. Well, it's the CFD on the Dow, but essentially derivative of the Dow futures. And this is there's a few little things I just want to take a look at. It's very minor detail. That's bouncing up. You've got to obviously you've got a level right down here. So you've got the first leg up, a pullback, and especially after you've got a spike like this. And if you look at where it rallied through, I just want to do this firstly. And this is what we're looking at each time. You're looking at the anchor to the trend down, so that it's moved down, bounced up, moved down. You can say that's a minor bounce, taking out the low. So it's continually making lower highs, lower lows. You get to here, bounced up, come down. And then this first leg up, if you can see, it's taken out. This is the anchor. So when you take out an anchor, for me, that's a heads up. Either we're going to go sideways action or we're going to reverse that trend. And if a trend is sharp enough on the downside, or upside even, if it just spikes straight up and it goes, and then you get your first pullback taking out the anchor, you can probably be inclined to think that you're going to go into pullback. And there's an opportunity on the short side because all this fuel, sellers are going to be squeezed out. And that's what you get. Rather than the market sort of popping up, pulling back and going sideways, there's a good opportunity on the upside. So we generally look for, you break the anchor, you look for your first pullback to buy into, and anticipating that this kind of move, if I can get it, where am I? This kind of move from low to highs is going to play out again. Okay, so that's pretty much where you're projecting the second leg to go to. Obviously, at the moment, there's a lot of bears out there. But this is the other thing. If everyone's bearish, there's no one left. It's easy to squeeze out. So you're going to get people going to be doing two things. They're either on the sidelines waiting for an entry or they're selling short. And people will do that all the time. Depending on how you enter, depending on your trading plan, I would much rather look for a lower high to sell into, and that's pretty much what we're waiting for. And if I was waiting for a lower high from this day, back here when you got the green day, it didn't really play out. There's nothing that plays out to my to way I look at things. This is your first spike up. You got a lower high here, but it hasn't taken out any real level. This pullback hasn't had a high low, so it's got to take out an anchor. So if I'm looking at, just draw that up, the way I'm entering it, the market's doing this. I want to see the anchor taken out and then a lower high. So this is essentially the anchor taken out. You've got your lower high coming to play, then I'm looking to sell. And it hasn't played out just yet. What we're seeing just now, you could say that's your run up. We're starting to get market getting a bit heavy here, it's popped up. So I would say there's a minor level there. So if we do get, and it has pushed through there. So what it's done is taken out stops, but it finished at that same level, roughly at the same level. Now, if we hold, if the Dow holds anyway, not we, but if the Dow holds below that high and starts to find some pressure, there's pretty much, you could say that you can enter through that low and you've got your lower high. That becomes, it's not so much a washout anymore. By washout, I mean it just takes out that level and finishes above. You ideally want it to finish below the level and start to retrace a bit and then look heavy and go again. And then you get your lower high like this scenario. But when it just touches there, you've got two things. It could be a washout and it's going to go higher. So what it does is sucker in a few short sellers. They have to buy back to press the market up. Or we're going to hold a lower level, which is what we want to see, and then the market's going to head south. If we take out that level there, 28, say 820, that could be short with your risk above, and then you're looking to start pressuring all these longs that built up. All right, so that's the idea. It hasn't played out yet on the Dow, and we could do the same sort of scenario on the ASX 200 without the Dow playing out. But I'd suggest that a lot of them, you might find it whips up through that level, and it does the reverse of that washout, washes out, and then falls in a hole. We don't know. Obviously, the US has got a lot of problems with jobs at the moment. Unemployment just keeps going up. I mean, I know they're talking up, they've got it under control. They're flattening the curve. I don't think they are. There's a lot of states that are willing to go back now to start to reopen. Now, I think everyone's going to be watching with anticipation to see what happens when they do reopen. If they reopen, they get a spike in numbers then there's going to be problems in a lot of other countries, and a lot of other states will just stay in lockdown for a bit longer. But we'll see. And I'm pretty sure, I would expect you start going out and about more, then you get numbers rising. I think it's as simple as that. Without a cure, there's not much else that can happen. So yeah, that's the way I'll be looking at the Dow. If you go to the S&P, it's going to have a similar scenario. We just draw that up. We've got the highs, flushed out those highs. you got sort of this minor level through here, which has broken through. And if we get that lower high, basically coming down, you might get a retest of that level, then sinking. We're looking for obviously a break that through that low. As long as we get that lower high, I don't want to see it press up through and come straight back down, because I think that's just a choppy market. By getting the lower high, that's evidence there's other sellers. Either buyers through here are taking the opportunity to get out, or there's sellers starting to enter in at that level, at a lower level below that high. And that's showing weakness. It's showing two things: a lack of buying pressure up there. So there's going to be buyers that are going to look for that continuation higher. But once we got from these lows up to this level, it's already soaked up a lot of juice from buying pressure that potentially come in. So what it does is drag people in from the sidelines into the market in the way of buys. And the more and more you use up that fuel, then less and less probability it's going to go higher. And that's what we're looking for. We're trying to pick that time when we run out of buying fuel, and we're going to get that selling fuel start to step in. So what it's just going from buying fuel to coming in, selling fuel going out, and vice versa and coming back in. Just sort of that swing, if that makes sense anyway. So a lot of people have been listening to me for a while probably understand what I'm talking about. Anyone that's new, the markets are generally about fuel, sellers, in the way of sellers and buyers. And you've got all this fuel that's built up on the short side, is being squeezed out. Is this enough of a pullback of this leg down that has squeezed out the weak hands into the market? If it is, and they squeeze it out and we've got no more buyers willing to buy here, there might be some opportunistic sellers who are going to dive back in. And we do expect that. Here's the ASX. We're on a 30-minute chart. So if we drop it down to, I'll go to 4 hourly. This is essentially what we're looking at. So at the moment, you can see what I've marked up. That's your selling pressure down here. We've got the bounce, which we can see it's grinding up here. Now that's not, if anyone's looking at that thinking that's a great little bounce, that it has come up, but there's nothing in the way that's bounced back up to me that's showing strength, showing signs of strength. It's not showing signs of bullishness. And don't forget, if everyone's gone to cash in the equities market, same with the US, if everyone's gone to cash, there's a lot less fuel that want to get in and they're willing to stay. So there's only sort of that less and less buyers willing to get in. And it's easier to push a thinner market if they're pushing it higher. If it keeps dragging higher, people are jumping in, dragging higher, and so on. So it's a lot easier when there's a thinner market. And that's why you can get this grind up. But that's not conducive to a very bullish market. Got a minor double top at 55, was it 55.55, and the market's heading south. We're starting to find resistance again at this level at 53.15, and we're starting to break down. And if we look at that, you can see pop up, pull back, retest, and we're starting to fail here. Now there is the opportunity where we've got our entry at 51.45. We can put an entry, this is more aggressive. That's not what I want, just below that low. And then you've got your risk. You can either have it below this lower high in here if that plays out. So if we start to head south, we've got our lower high around here. Otherwise, you can just a bit wider. You can leave it at 53.70 and just tighten up your entry. Obviously more risky, but you've got what you've got in your favour is this minor double top up here, another double top up here, and it's starting to fail again. So anticipating from here, and this area here, this major area, is a lower high comparison to 55.55. That to me, we're looking for an extension lower. It's a higher probability that we're going to extend lower. So we just got our eye on this one at the moment. Right, so hope that makes sense. Yeah, we'll just quickly look at the DAX. I haven't got that up. Let me just take a look. I've got that somewhere in Germany. Just see. So back to 4 hourly. Let's just delete all that out. Okay. So you can see, same sort of thing. You've got so much fuel built up on the short side. My mouse doesn't want to work. All right. Let's go across to here and go on the futures. So move drawings. Right, so this is the same. We've got all this fuel built up here. It's hard on the DAX because there's no real anchor on the downside. Looking at the daily chart, if we go to a 4 hourly chart, we might see a few anchors that are broken to this move down. Where you can see, we've got a anchor in here. So this is just your lower highs, holding the market trend down. They're not really coming out, are they? That's probably better. And then you probably got this last one where it did retest low. So as long as it retests low, it doesn't have to break through and make a lower low. If it retests, you got to move the anchor down. That's the way you tighten up your stops on the way down for a short position. We pop up, pull back, high, low. So about this stage, you could be sitting there if you were short going, oh, I'll just close it out because there's a good chance we're gonna go through this anchor, which we did. And then you get a level up here, the market tries to sell off, doesn't, and it can't do it. So you've got this pop up here. If you extrapolate that out, clone, that would suggest that we could be looking up to a level first. I mean, that's just by using from low to high, low to high. So you get the first leg up, consolidated sideways, yes, your second leg up, it's already started. But whether we're going to fall short of that zone up at 11,144, I don't know. But at the moment, you can see, to me, that would probably be the key until we break through that zone. So with the DAX, I would ideally, this looks like it's going to roll up again, and we could expand up to this level 133. We could easily do that. So if I wanted to go short, I wouldn't go short in here because it hasn't broken an anchor to this leg up. Okay, it hasn't broken any key level to drag me in short. So what I ideally look for, I want to see it hold below, this level. Just draw a line there, below that level. I want to see it pop down, and I'll take advantage of the first sort of lower high that starts to come into play. And ideally, like to see that kind of pattern. All right, so that's what I'll be looking for. I want to see that come down. You're going to have buyers that won't close out. You've got buyers from here, buyers from here. All different levels. Some are in profit. They bought off the low here. They've got a lot of room to move. They bought on this low. Okay, they could be into negative territory soon. They're actually up. If you bought anywhere in here and it starts to break down, they're the first ones going to come under pressure on the short side if the market does head south. So you get that down there. If they start to pop up and we find weakness, there's going to be people, all these buyers, going to start to pile in, running for cover if this market starts to sell off. And then you're just looking for your entry off a lower high. That's confirmation the market's heading south. So we'll see. I'll just take out that DAX. So that's it for the DAX. What I was going to quickly go over, we don't have indices. I'm just going to go over it as an example of the way I've been attacking the market lately. Well, what I'm looking to do at this stage. I'll go to another one. Let me just get off that and go to now. This is PPE. I was actually looking at this, thought it was great, but it's very, very thin. So if you're looking to buy that, this morning it was a lot thinner than that. Thinner by thinner, I mean you can see the offers. It was about 10 cents or 10 cents apart between two different offers. I'm not willing to buy that. It was around 160 mark, and it is. Look at 160. The next offer is 20 cents up at 180. So I'm not going anywhere near that because if it does go in your favor, if you bought it here and it goes in your favor, that's fine. But if you've got the same sort of thing on the downsides, you've got to sell into that. If you're wrong, you can get crucified. So that's why you really do want to see some volume on the bid and on the offer. You don't want to see these large gaps in between. So that's why I was not going to go near that. I actually don't mind the way it's consolidating through $1.40 and looking for that press up. But the liquidity is essentially going to just keep me out. So if we take a step back and just look at what's happening and draw that up as an example, here we go. Just taking a screen snapshot, just be 1 minute. There. Okay. So what we can see, the market, this is the big sell-off. You can see belted down here, and let's just forget about that. But it's basically come all the way screaming down. The good thing about stocks, when you get to sort of those oversold levels, I'm looking at stochastics, so I'll view that as oversold. It gets down there. It doesn't mean it's going to run out of steam on the downside. It just means that you're running out of sellers willing to keep pressing it down. So that's the way I'm viewing the market when it's oversold, overbought. Overbought, you're running out of buyers. Sooner or later, you have to run out of buyers. Nothing keeps going up without pullbacks of some sort. So if it pulls back, it starts to look good again, then you can buy it. And the same on the downside. If it keeps getting smashed down, sooner or later it's going to bounce, especially with stocks. It can only go to zero. Okay, so the lower it goes, someone somewhere is going to be looking at that as a bargain and is willing to jump in. And the lower it goes, the more people look at it as a bargain, the less sellers you got. So it starts to swing from more sellers in control, to start to swing to potentially buyers starting to come in and buyers going into control and lifting the price back up. So that's where we're looking for essentially those opportunities. So you can see here, especially with this you've got volume lift here, the volume's spiking up. As you get into lows, that to me would signal some form of capitulation when there's a massive spike in volume. And the price didn't go anywhere. It was on that green day. So this green candle here, price is down on the lows. So it is just, it could be to a signal that there's a lot of buyers willing to step into somewhere around 90 cents below a dollar. And they stepped in. Obviously, there's still some sellers. So if you're looking to sell, you'd look at that and go, hang on, let's just wait. All right, then you start to get a lift. You get a lift up to somewhere around $1.60, $1.55. All right, so that's fine. That could easily go there and go smashing straight back down through 90, and anyone who bought it there is now wrong, and it's down at 50 before you know it. But what you're looking for is the first pullback. What's going to happen on that first pullback? Considering that this market's down on its knees, it's in oversold territory. Weekly is oversold as well down here. Daily is oversold. How much further can it go? We don't buy it without some sort of confirmation. So for me, I'm always look to buy off a higher level, and the same sell. So if you're looking to sell, the market pops up, you're looking for an opportunity to sell. You don't just sell it up here because it's extended. You sell it when you've got confirmation that there's a lower high coming to play, and you're selling in anticipation that all this fuel's going to get out. And the same on the reverse side. The market's been powering into a low. You don't buy it when it's down here. Okay, for instance, because it pop up, lower high, it goes screaming back down again, and that could be, another 50% loss in your position. You want to buy when it's, if we just take a step back, we want to buy when it's starting to show signs of holding a higher level. And that is basically people stepping into the market at a higher level. They're not waiting for it to get back down to the lows. They want to see, they're happy to buy it above the recent low for whatever reason. Who cares why? But that's why the market's starting to hold a higher level, because more buyers are stepping in. So that's what we're trying to see. And you can anticipate that the more it's moved down, the higher probability it's running out of fuel on the downside, and we're starting to get buyers getting interested again. So what I'm really looking for is that you've got, well, let's just take that step back, draw that a bit better. I'm just looking for a lift off a level potentially. So not with this one. I haven't traded this, and I didn't trade it, but it's just talking through that example. So what I'm looking for when I'm looking for that break up, I'm essentially looking for what I mentioned before. Let's just clear all this up. I'm looking for a couple of legs, a couple of nice legs there. So I'm looking for that as one leg. That's your first pullback. I'm looking for that secondary leg to expand up. And then you're getting more of a scenario where the buyers are starting to get a bit of a fuel. And then if there is any sellers left, you might get it roll over from here, back down again. But we're looking for the opportunity on the upside for a bit of a squeeze and buyers to start chasing the market higher. Now, it's going to be a bit tougher if you've got the ASX down and the S&P all looking to roll over, but they haven't rolled over and they could turn around and squeeze back up again. All right, and then we've got an opportunity on the upside, for example, on PPE. We've got a couple of others lined up, but we're looking for that same sort of scenario. So we're looking for the opportunity to get involved in that secondary leg up, because we know that that's just opportunistic buying. And if you're buying like that, that's fine. If that's in your trading plan, you've got to know why, you've got to know where your risk is. I like to buy for a higher level and look for that secondary leg up, because I don't know where that's going to go to. And then you're just basically looking left to see where it could go to. Okay, then you're just picking out levels. So if it runs, if it runs up hard, that's my next potential area where I'm going to have some concern, where sellers are going to start stepping. If it goes through that, next level up, and next level up, and so on, and we just ride the wave up. If not, if we buy, say we're buying somewhere in here, we buy today because we've got another higher level. Then we're looking to see if that doesn't expand higher, how are we going to get out? We're just going to try to, you might raise your stop behind the daily candle, or you might look down to a lower level. So you might look down to a lower time frame chart. We're on a daily, you might look to our hourly chart to refine your exits. All right, so there's different ways to attack it. The basic premise is we're looking to buy off this higher level on a daily. We might drop down the charts for our entry and our exit. Different time frames, lower time frames are a bit faster. So that way we're refining our exit, our risk, and we're refining our entries and exits, but we're minimizing our risk even lower than potentially off the daily chart. So the risk reward might be 2-3 to 1 instead of 1 to 1. But that's the premise. We're looking for that secondary leg up. All right, so that's the way at the moment. I'm looking for some opportunities. PPE was one. The other one we have got was, what was that? Let's put that out today. There's a bit of a lucky dip for people. APE. And if you look at APE, I mean, not that I necessarily buy just because it's oversold or overbought, or sell because it's oversold. What am I talking about? Buying because it's oversold and selling because it's overbought. That makes sense. So I'm not going to sell just because the stochastics hit an over. I want to sell off a lower high. And if you were trading it around this time, going here, if you were trading in here, we're oversold up here, that's great. I wouldn't sell it there because it would keep going. I've seen some weakness, lower shoulder, we call it a shoulder trade, back below the MAs, I'm selling in there and looking to ride this down. All right, so I've got more confirmation, and that's early enough for me. So to flip it around, we're in oversold territory down here. The market's at a higher level than what it was last time it was oversold, which was down at below $3. We're trading around the 350 mark. So for me, that's your first heads up. We're holding a higher level. All right, and there's an opportunity to get involved on the upside. And if we look at that as one leg up, and we extrapolate that out, say from 350, you could be looking to 550. So we're looking for somewhere to enter and a reason to enter, which I won't give you the details, but a reason to enter. And we're looking for, again, that's your initial leg up, and we're looking for this level to hold through at 350, which it looks like it is. Market's up, 13% right now. It's been a bit higher. And we're looking to buy on our setup, on our entry setup. And we know where our risk is going to be because we're looking for this to be the starting point, 350 for another leg up. And we're looking for a leg up of somewhere, say 250 to 5, what's that, $2.50? So about 3, 4, 5, 6, up to 6 potentially. So there is room to move up to 6. It may take some time, but I guess a lot of that is going to depend on what the overall market's doing also. And if you go down to the weekly chart, the weeklies are sort of hovering around that oversold territory. And don't forget, this move down here is not with a lot of conviction on the volume side. All right. So that's sort of the reasoning behind some trades at the moment. And again, we're not looking to enter here, looking for a run straight back up to the highs. It's a short, sharp, tight risk type of entry and tight risk trade. Because I'm still of the mind that we're going to retest on the ASX. We're going to retest below 5,000. We're going to retest the lows. Same on the Dow. You can't have this many problems and not retest the lows at least, or go to lower levels. And if we're going to lower levels, we start to break through the previous low on the ASX, which is around 44, then game over for APE and all the others. They're just going to get hit again. All right, but if we start to retest down there and start to rise again at a higher level on, say, we go down to 47 on the ASX and we start to rise again from there, then I think these little setups are going to start to pay off on like, for example, APE, if it hasn't traded yet. All right, so that's it for those. That's what I want to discuss there. So now we've been going for about 40 minutes, so I've kept it okay. We've got a couple of stocks we're going to look at now. So the ASX stocks, anyone that's Aussie, happy just to sit around and listen. If you've got something else you want to have a quick look at, put it in the chat, and I'll see if we can get time to go through it. So a list of SGR, TNE, NAN, PME. See if we can get through those, Lauren. And then we've got Pete's put in a couple as well. NEC and Nick. So we've got a few we'll look at, and then we'll go from there. See where we're at. So the first is SGR. See, SGR is, it's bouncing at the moment. And again, for me, it's just whether or not we're bounced hard enough or not. And it could be a bit, although we haven't really, you could, two things. I'm going to mumble a bit before I get it right. So there's two things. Have we, is this the leg up? And that's your, basic support, and we're not going to get back at 280, and we're going to hold and go straight down from here and straight down to the lows, or is it going to rally? I don't like the way you can see these latest green candles. That's a good update. These couple of green candles are good up, solid updates from high to low, from low to high, finish on the highs. These last 4 days are not, they're suppressed. That's not a good sign for buyers. So if you've got this and you're long, I'd be holding my risk quite tight around the 220 mark. I wouldn't want to be mucking around because it has come off these lows at $1.60 quite well. Sort of popped up, pulled back, retested $2 and ran up to $2.80, after sort of a minor retest around the 230, 225 mark, just in here. And we expanded high. So especially after you get that green day, That's where a lot of people are going to be chasing their tail, fear of missing out, thinking this is going to keep going higher. And then you got bang, look at the red candles that come in. Those down days are really start to accelerate. Now we have got some buying off 230. That's great, but there's no conviction behind it. So that's to me is telling me that look, I wouldn't be looking at this for a buy. I want something that's a long way from the MAs. And if you go back, maybe the daily is. If you go back to and look at the volume on this little, couple of green days, we've got next to no volume. It's really, eased off. To the weekly, that's not far enough for the MAs. It is here when you're looking at that first press down. It is far enough for the MAs where you can expect, even if it's a reversion to the mean style of trade, where you're pulling back to the MAs from underneath, that's fine. There is opportunity, especially when you're looking at the weekly and you're trading off the daily. Now, when you're at the MAs on the weekly, is there enough opportunity on the upsides? I want to see some contraction around here. I want to see some price consolidating at least, spend a few days consolidating around above 220 essentially if I wanted to buy. But in saying that, I'm probably more inclined to go short on this, especially if the market falls apart with a breakthrough 220. As long as it holds around 240 or 50, a lower higher than this 280 zone, I'll be inclined to short that. So we'll see how it goes. What else we got? NAN, T&E. T&E looks back up to these highs. Technology one, yep. It's the good thing about this one. Look, the weekly's starting to get sort of go from oversold to overbought. So you'd ask yourself, when we're getting up to the previous highs before the sell-off, the big, even highs from last year, is that the area we wanted to be buying at when the weekly's overbought? You go back to the daily, you can buy that because you know where your risk is going to be. That's fine. And we have, looking at stochastic, so it's gone from overbought, had a minor, just talking about stochastic, sellers have come in, buyers bought it straight back up to go to overbought again. And now we've had a deeper correction lower, but price is holding up. It's holding around 825 to 850. It's just bounced up off the last couple of days. So if we start to get a volume increase, there is potentially a move on the upside. But I don't like the weekly. I think there's better things where the weekly's oversold and you're starting to get some sort of setup on the daily. But when you start to get overbought and you're looking at the potentially, don't forget what the overall markets are doing, the ASX, the Dow, or if they start selling off, this one's probably going to get hit quite hard, I would expect, because it's rallied quite hard from 640 back up to $9. All right, so that's probably one that, if the market ASX starts to turn and rally quite hard as well, there is room to move on the upside. Because that trend, the daily trend is still up. It's just at a zone where off the weekly, do you want to buy? We failed initially back in 2019, December. Retested it back at early 2020. Failed again. Lower high, sold off hard, and then we're back there again. So are we going to fail or are we going to go through this time? We could go through. We've cleaned out with this move down, cleaned out a lot of buyers with this move down. A lot of buyers from, that's taken out the lows from way back in, well, pretty much all of 2019. It cleaned them out. If that's the case, I don't like a V-shaped recovery like that. I don't trust it. What I see is that flushing them out, buyers chasing up in a thin market, come back to the highs, and anyone that didn't sell up here, you're going to bail on it, unload on it. So I get kind of nervous about that sort of stuff. What was the next thing? T&E, we've got NAN. What did I just type NAN? Was I talking about? Look very same, very much the same. All right, so this is NAN. Similar type of thing when you've got a market that's been powering high, and this is what we're talking about, knowing where you're wrong. And if you're holding this up here and you bought it, you've got to know that you're wrong below this level. This is just a bit of a heads up. So if you bought it up here, the trend is up. It's looking okay. That's fine. This is in early this year. You bought through the break. You bought it basically on this candle through the break of the high of 31st of Jan. Your stop has to be below. Okay, you don't just wing it and have no stop. And that's not trading. That's investing. And investors would have got it wrong because you're investing and it's all looking great. There's no numbers come out yet, but the market's absolutely getting, sold off hard all the way down to 4, and you're buying it at say somewhere around 7. You're down a hell of a lot, and that's not, for me, it's not somewhere I want to be sitting a hold there a position. like that, you're still underwater now, and we could be potentially selling off again. All right. So I wouldn't trade like that. Hopefully, no one else trades like that. Just because this market's heading higher, because everything's looking rosy, you always got to know the higher it goes up, the less probability I associate with a continued move higher, and that's just the way I trade things. I'm more inclined to think that you're going to get some sellers stepping in. So that's why even if you're committed to buy here, that's fine. It's a setup. You got to know where your risk is, and if you don't place your risk there because you don't want to be wrong, or you don't want to take the loss, you don't want to take the hit, then that's going to cause you so much more pain down the future in your trading. So yeah, that's why you can see that it sold off here. We bounced back up. You got back to potentially break even, slightly down, and if you didn't close it out because you didn't get stopped out here, and you weathered this, yeah, I don't know how you weathered that because there's a lot of stress back then. Or you may have just, you capitulate, you sell on the lows, and then you see this bounce, and then you're kicking yourself. I'd much rather be getting out, reassessing with a clear mind. So back to where we're at the moment, this move has washed out a lot of these traders. So the move down to lows, it hit basically $4 on the 23rd of March. We go right back to about here, and that was in mid last year, 2019. So anyone who bought it after that is either out or they were, well, until we got this bounce, they were under some severe pressure. So what it's done is cleared out a lot of the weak hands. If you're committed to this as an investor, fine. That's fine. You've got to know your fundamentals, and you've got to have an overall view of what the market's doing. Are we going to, we're not going to see another sell-off, because if we see another sell-off, there's a good chance this gets hammered back down to 4 and lower again. If not, that's great. So you've got to know where your risk is, what I'm trying to say. Long story short. Let me just check things. Okay, that's good. So here, potentially to me, that's looking like a lower high, Lauren. I'm not too keen on it. If you're looking at that, it's just dig it in. If it's going to be a lower high, it's going to want to break through 575 for me to confirm it and hold below this. So essentially, you're going to have your sort of head and shoulders, shoulder here, head here, and another shoulder on the right side. Goes through 6, you probably want to be out, or you give it a bit more room below 575. If you're long, for instance, you might want to be out. But I'm not putting a lot of faith in a continue move higher. You can see that, we expanded higher. That's a bounce. You're going to expect a bounce after that kind of sell-off. Buyers start to step in here. They try to get through the highs. It doesn't go anywhere. And then you get a sharp sell-off back down to where, essentially back down to that $6 mark. If that was strong, shouldn't have pulled back, and you should have gone higher than just through the highs, and then finished basically, that's the high there at 659. We closed at 662, and then that day was just slightly lower at 656. So that's not strength. And then you got to sell off straight back down to 6 again. So again, you add those sort of things together, that's more of topping than anything else. So if we start to get, stochastic buyers start to pressure it up, you start to go sort of that overbought territory again, and we don't get up to 675, we hold around 650, 60, I'd be bailing on that if I was in. I wouldn't give it much legs, and I'm not really looking at that as a buying anyway, because I'm still, like I said, thinking that the market's going to roll over. That's NAN. We've got PME. Could be different intraday. I mean, just look at intraday. I've got my 5-minute charts. You got to remember there's opportunity on the intraday chart. So this, for example, we got all this consolidation through here. It spiked up today through 25. Essentially, you found sellers at 25, again here, and again here, and earlier on the day it reacted lower. Buyers lifted it. Prime entry on the 5-minute chart, just in here, if you can see that. It popped up, consolidated that high above the VWAP and above the MAs, and then lifted. And if you buy through the high, your risk is below. You manage to get a spike to 25.40. If it consolidates again around the 25 mark, there could be another opportunity, whether it's later today or tomorrow, intraday. But you've got to understand it will be intraday. But the fact that if we hold this 25 mark, you've had quite a few days where the market's consolidating sideways. And that's not a bad sign, all in all. We go back to daily, that's consolidating here, and it could be, if we hold above that 25 mark, there could be an opportunity to buy. I mean, if there is, that's the first time you got this sell-off. It's popped up, the MAs are turned positive again. we're consolidating around those highs. And if we're starting to lift again, you know where your risk is. So if you're taking a punt that it's going to continue higher, take a stab at that buy. You're looking to sort of 30, potentially 27, which is these previous highs of this zone in here. Then you know where your risk is, and you can tighten it up if it starts to stall. Okay, but all in all, even that weekly, the daily's extended, the weekly's potentially extended. I don't have a lot of that in the daily and the weekly chart to buy, but intraday, yeah, intraday we could have a spike up, but you've got to know it's intraday, and you've got to be quicker, and you've got to have a target where you're going to take some off at least, and or have a method to really raise your stop loss to tighten up the risk. Because if it does spike up, and like this, look at this day, spike up and then completely get sold off, you're going to be hanging on, day after day. All right, that's PME, MCR again. So a lot of these have bounced. Mincall's bounced. A lot of the same as we, big capitulation, higher volume on this big sell-off here. And as we've rallied, we're running out, it looks like from a volume perspective, we're running out of steam. If we consolidate here and volume starts to lift, or at least be a bit better than that, 40,000, which is next to nothing when you got, what was that, 69,000 shares, and even a few days ago we did 1 million shares. I think, 1 million shares. It's next to nothing, is it? So yeah, not something I'd want to see if I want to be a buyer. I want to see if you get a break or you get your setup and you're lifting volume, great. Then you know that there's other people who are sort of looking at it thinking it's going higher. But if we draw that up, is that what I want to look at? Yep. We just, the reasons why I probably wouldn't really want to buy. Like, that's assuming you're buying, or you could be looking at a short. If you're looking for a short, I'd be more inclined to agree with you. See, 1, 2, 3, and even 4, all around that zone. You can say your zone's around 71 to 74. Failure, 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 and then you got, at that time that market was still heading higher, this is your lower high coming in. Last time it failed off here, we come back down and retest and start to lift again. So you got little entries back into the highs. It didn't go again. This third time when we started this year, when things were not looking too great, that's when you got that lower high coming to play. And especially not so much here, but more here and here, because you got this break. All right, and that's what you want to take note of. This little break lower, taking out a previous level in here, took out the previous level, bounce back up, that's fine. And then we started to stall again back at this little inside level at 68, and then we started to get this sell off. All right, so that's just a short setup that you could potentially look at. Big sell off. We've got our bounce. Are we starting at some sort of lower high building? I mean, the lower high doesn't mean we're going to retest 40, but it does potentially mean that we're heading south again. See, a lot of things for me, I'll be looking at the short side. You can see high low here, market's starting to rise. We're running into pressure up here, and if we can't get through, break up and out and start to target 70, that to me is looking like a short. Volumes come right off. You're not really wanting to see that. As we start getting the highs, you want to see more people getting involved, looking like it's going to break through. Volumes start to pick up as you get towards 60 again, because people are getting excited. Instead, they're getting a bit tentative. Does that make sense? So if we start to get through, we start to at least break down here, for instance, 55, I'd be looking to bail on that if I'm long, or I'd be looking for a short, as long as it hasn't got up through 60. So yeah, this could easily start to roll over if it doesn't start to impress in the next couple of days. So that was PME. No, that was MCR. Did I skip something? We talked about PME, didn't we? All right, NEC, something we've looked at for a bit. That to me is a bit better. You look at that weekly, we absolutely smashed, bounced, and it's consolidating. So if we can consolidate here, this goes back to our secondary leg up. All right, so it's pretty much what we discussed on, and I have got my eye on this one, what we discussed in APE, what was it, PPE, the stocks before. We're just looking for a secondary leg up. If we just draw that up, just get right in on that. Draw that up. I like that because I really like the fact that it's been sold down, right? We've had this bounce. That's great. If that was weak, should have come down again and at least retested 80. It's not. You can see that chopping around here. So we're sort of stuck in that range, 110 up to 125. The longer it goes here without a pullback, the more inclined buyers are going to be watching it thinking, let's step into it. And if we get from that 80 up to say roughly $1.25, what's that, 45 cents, takes you somewhere to 155. There is potential for it to move up to 155. I wouldn't expect so, but at least there's potential for a bit of a rally. You know, if you can get 20 or 30 cents in that, and that makes it 1 to 1, 2 to 1, great. It's worth the risk. But we'll see. Again, I want to see within this structure, I wouldn't mind seeing pop up a pullback into a higher level, say mid-range, 115 to 120, and then start to lift, because then I know that if you just bought it on the break there, there's no reason to say that's a bit of a washout and we turn around and we go straight down through 110. But if you wash it out, come back and we start to hold a high level within this band, you know, between the low at 110 and 125, you're somewhere holding that higher level. We start to go up. I'm happy to buy on the break there and hold my risk below, because that to me is telling me I'm not the only one thinking of a buy. I'm not the only one thinking of a move to 155, potentially 150. And there's more weighted numbers on the buy side than sell. Right? And I don't mind the look of this. This is grinding lower stochastics because it's getting to a good little zone. Okay, you've got, if you look at that day, a couple of good days in here on the green days. We start to get a bit of a break up in volume. The volume starts to lift and we get a bit of a spike. Then, yeah, I think it's going to suggest that we're heading higher. NEC, that was. And last, we'll just get on to NIC. Nick. All right. NIC, again, it because if that was a forex pair or index or anything like that, that to me is a short. The fact that it's actually a stock, you know, and they're limited to the downside essentially. People want to buy, they don't really want to sell. And if people say that short sellers are killing the market, just realize the highly shorted stock's 5% or thereabouts. So this argument that you should ban short selling to me is ridiculous. It's not short sellers that are hitting the market lower. It's your super funds, your mums and dads that are long. They're the ones selling it. If you took off the short selling, all it's doing is taking away some potential buyers also, because if you sell, you're going to buy it back. So for me, it's a very, very weak argument, and obviously a lot of people use it to blame the reason why the market's heading down. It's not short sellers. It's people bailing. It's simple. So yeah, that's my little sermon on short selling. But yeah, if I was looking at this as an index, you've got the market's headed up, a pullback, this pullback, when you flushed out this leg a bit and retest the high and failing, and then you got this leg, there's potential for that to be a major lower high, and you're going to get from high to low, expand that down, you've got a good move on the downside. But it's not, it's a stock. So that to me is a major clean out of a lot of buyers. Right. So ideally what I'd want to see, if we get a pullback and we get it, it starts to stall at 40 cents, that's your first leg up, maybe a flush lower, and then we start to rally again. That's where I'd want to buy. I don't really want to buy at this level. It is a lot the same as what we just discussed, NEC, but NEC is more, it's done, if you just take a step back, so yeah, NEC is consolidating, but it's the bottom third of that move down. This is more of a 50% retracement it's got to of this move down, or even if you take this move down, it's about 50, so it's already cleaned out a lot of sellers, maybe, or it's dragged in a lot of buyers. So that's why, and I don't like the fact that higher level, and potentially another higher level, but we're running into that 52 zone, and we keep backing on. Backed off here, tried again, backed off. We're trying again. We're starting to fail even today off 52. Where did we get to? 51.5. We're starting to fail again. So there's easily we could roll out and start take out 45, and we're heading south. All right, because that to me doesn't look like as bullish a setup as what we said before, because there's already been a lot of buying for buyers to lift it off the lows at 30, roughly 50% of that move down. That's quite strong. Whereas you got something like what we just said, NEC, it's still a lower third of that leg down, that major leg down. So there is still a lot of potential room to move, and we're consolidating nicely sideways rather than getting these little minor higher lows, which could easily get washed out. Right, so I don't really want to buy that. And again, it comes down to what's happening with the ASX and the Dow and the DAX and all that. So look, we'll see how it all goes. Yeah, so that's probably long enough for today. Just ticked over an hour. So yeah, no, look, Pete, that's great. What you're doing is looking in the right spots. Something that, but it's just that sort of that fine tuning. I know what you're looking at, just fine tuning of why. Keep asking yourself, and I think sort of most people, if you ask yourself, is there enough fuel to get squeezed out? There could be a good opportunity on the upside or the downside. And if no, and if you're looking at this, and that's been quite a hard bounce, I'm suspect to buy on the break. I would be thinking if I bought at 53, for instance, and I got my stop below, I'd expect that more to be a washout. Stop me in, a trap, and then the market to capitulate and trap me out for, stop me out for loss. That's what I'd be more inclined to believe. So that's why I wouldn't trade that. If you're trading intraday, intraday brings up a different opportunity, don't forget, because your stop's going to be a lot tighter. And, if you're talking about, if you're doing a 10 gram position size, always, right, that's the way you trade. If your risk is at 45 and your entry is around 53, your 10 gram position size is going to be a lot less CFDs or a lot less shares that you're buying. So your risk reward, 1-to-1, is going to be, your target's going to be a lot higher as well. But if you start to minimize that by reducing your risk intraday, even if it doesn't kick on and you get a spike to 55 or 56 and it comes crashing back down again, intraday you could easily get a 2-to-1, and that 10 gram position size could be a lot more CFDs instead of 3,000. Well, not 3,000, whatever it is. 10 grand will be a lot, wouldn't it? 50 cents. 10,000 would be 20,000. At 50 cents, you might do 40,000 because your risk is a lot tighter, a lot smaller, and to get 1-to-1 is a lot easier, if that makes sense. So it's just your mathematics if you're looking at intraday. So again, your setup's going to be the same. Just go here. Intraday volume. We look at half an hour. It's not really showing on the half an hour chart, but you'll know we sold that. If we start to lift and consolidate around the high and we look to break, we could get a break like this. If we get a break like that, great. But you got to be quick, don't forget. So it's not everyone's cup of tea intraday, and we're still looking for those daily. But yeah, there is opportunity if you know what you're doing, you know what you're looking for. Let's actually just go to, I want to see this one, Mesoblast. I was looking for a short back in here, and I just could not get in on the short side, and then I sort of lost track of it after I consolidated back up. But it is selling back off. There's room that this is going to roll over. You've got this massive gap up. There would have been a lot of short sellers actually squeezed out on this open up. I know a few people have shorted it into the close Friday and then saw it gap up in US trading, and then knowing that it's going to gap up today on the open. But there is opportunity for fill that gap down to 3 on the short side. Not saying it's going to happen, not saying to go and short it, but just look for a potential setup, because what you've got is that euphoria. And again, I don't like to say it, but it's your mums and dads buying on the open. You get that spike up, straight back down again, and then it's heavy. You got a bit of a sell-off. Sellers take the foot off the gas, back to VWAP. Looks like it's a buying opportunity, back to VWAP. Now it's starting to sell off again. All right, so when we sort of got a level that's tested a few times around 4, the more it tested and fails, the more likely we're going to head lower. So I think that the actual sell I was looking for was around 406, 405. Missed that, went down a bit, and by the time I got this little breakdown, I wasn't really willing to chase it. I missed it. Would have been a good opportunity, but you can see why we've got gap up, green candle, red candle, tried to flush them out, break straight back up again to 440, and then failed straight back down to the $4 mark. And then we started getting heavy off the VWAP heading lower. So there was a short opportunity there. Yeah, Jason, saw that. The Aussie, anyone that doesn't know, is kicked off, and I don't want to talk about it because I'll cry. I was actually, so anyone doesn't know, that was our entry. That was our stop level if it triggered the entry. But when it doesn't trigger, we use that as just a cancellation level. And I was watching this saying, look, it could easily go. We could still go. Problem is, I think it, and this is what you'd be looking at that stage. That was your high low. What time was that? It was 6:30 at night, Friday night. You had some opportunity, and probably your better opportunity was around here. I like that kind of squeeze, knowing that you're back on the rise again. And that kicked off at 3:30 in the morning. I was well and truly asleep by then, dreaming nicely. Was an opportunity in the morning at around 9 o'clock, but I just wasn't there, unfortunately. So, and I didn't really expect that to kick off now, to be quite honest. We're back at this high. I know we've had a key higher low in here. It is starting to rally. We are stretched, in my opinion, but you can see stretch doesn't mean anything if you're on the right side of the market. Or it doesn't mean any. It doesn't mean too much. If you got that rally, and it's kicked off nicely, but unfortunately, not to be. We're right up in these highs now at around 64.40, so I wouldn't be taking a long now. We'll just see how it goes. Oh, all right, it's not going to delete. So yeah, so we'll see how we go. But that's a shame, isn't it? I hope someone got onto it. Yeah, sorry, mate. We'll keep going. That happens. That happens. US yen. That's another one we're looking for long. It just didn't. It just hit the actual exit level, but that's looking more heavy than your Aussie. Aussie kicking off nicely. All right, let's call it a day there, guys. Thank you very much for joining me. If you've got any questions, from TradingView, you want to stick through a quick email to support@tradesetup.com.au, feel free. Anything I can help you with, send through an email. Anything I can help you guys from TradeSetup, any of your subscribers, feel free. Like I said, send through the email. Yeah, next time, exactly. Oh, we'll get it. Yeah, so have a great day. Thanks for joining me, and we'll speak to you again soon. Cheers, guys. Bye.